If you lost everything tomorrow, every dollar, every investment, every plan, what would guide your next move? Most people would respond with fear, or instinct, or whatever the last finance video they watched told them to do. But the Stoics would respond with something else entirely. They would respond with virtue. Because 2,000 years ago, before there were markets, brokers, ETFs, or economic theories, there was a blueprint, a mental operating system, a way of making decisions that endured empires, plagues, wars, collapses, and uncertainty. It was called the four cardinal virtues: wisdom, courage, temperance, justice. And whether the Stoics knew it or not, these virtues map almost perfectly onto the principles that build wealth, destroy anxiety, and make your financial life nearly impossible to break. This is not motivational. This is not philosophical fluff. This is the most ancient financial framework you've never been taught. Let's go deeper. Most people believe money problems are money problems. They're not. Money problems are behavioral problems, emotional problems, decision problems, time horizon problems. Money doesn't control people. People lose control when they face money. This is why you can teach someone the basics of investing, and they still panic sell, still overspend, still chase the next thing, still sabotage the compounding process. Because the issue was never financial. It was philosophical. The Stoics knew that external events don't determine your outcomes. Your internal framework does. Your virtue decides your behavior. Your behavior decides your wealth. And your wealth decides your freedom. So let's explore the four virtues and reveal how each one shapes your financial destiny. First, virtue, wisdom. The ability to see clearly, especially when others can't. Wisdom isn't intelligence. Intelligence makes you clever. Wisdom makes you calm. Intelligence makes you reactive. Wisdom makes you grounded. Intelligence helps you optimize. Wisdom helps you endure. In finance, wisdom means understanding risk, understanding time, understanding compounding, understanding what's inside your control, understanding your own behavior. But most importantly, wisdom means removing illusions. The illusion that you can predict the market. The illusion that more information equals better decisions. The illusion that complexity is superior to simplicity. The illusion that you can shortcut the process. A Stoic investor cuts through illusions the same way a sculptor cuts away marble. Because clarity is where wealth begins. Wisdom asks questions like, is this decision aligned with long-term principles? Or am I reacting to a feeling? Is this investment simple and understandable? Or am I trying to impress myself? Is this risk necessary? Or am I chasing excitement? Wisdom is silent. Wisdom is steady. Wisdom is unimpressed by noise.
And in a world drowning in noise,
wisdom is a financial superpower. Second virtue, courage. The strength to act, especially when fear tells you not to. People believe courage is dramatic. It's not. Courage is quiet. Courage is subtle. Courage is the invisible force that makes you do the right thing, when everything inside you wants to do the easy thing. Courage in investing means staying the course during downturns, buying when headlines scream panic, holding when your emotions beg you to run, resisting the crowd when the crowd loses its mind, staying long-term in a short-term world, Courage is never comfortable. If it's comfortable, it's not courage. When markets fall 20%, 30%, 40%, you don't need intelligence. You need courage. When everyone is selling and fear is spreading, and your stomach is tight, and your mind is racing with, what if this time is different? What if I lose everything? What if I'm being stupid? This is where the Stoics step forward, not because they feel no fear, but because they recognize fear as an unreliable narrator. Epictetus taught, in every situation, ask, what would a wise person do? Courage is not the absence of fear. Courage is choosing the wise action despite it. And in markets, that choice often feels like stepping into fire. But the alternative, stepping into panic, burns you far worse. Third virtue, temperance. The discipline to restrain desire, especially when desire feels justified. This is the virtue most responsible for building wealth. And it's the virtue most people ignore. Temperance means self-control, moderation, intentional limits. It means not spending every raise you receive, not chasing lifestyle inflation, not acting impulsively, not letting excitement override discipline, not touching investments you said you wouldn't touch, not changing your strategy out of boredom. Temperance is the quiet architect of freedom. Without temperance, every dollar earned is spent. Every opportunity is sabotaged. Every long-term plan is interrupted. Wealth crumbles when desire grows faster than discipline. This is why Seneca practiced voluntary discomfort. Sleeping on the floor, wearing rough clothing, living simply. Not to torture himself, but to prove he didn't need anything to feel whole. If you cannot control your wants, you cannot control your wealth. Because money doesn't disappear through catastrophe. It disappears through 1,000 small emotional decisions. Temperance is the virtue that prevents those decisions from becoming your destiny. Fourth virtue, justice. The virtue of responsibility, doing right by others and yourself. This may seem unrelated to money. It's not. Justice in finance means providing for your family, keeping your promises, planning responsibly, avoiding harmful speculation, building wealth ethically, making decisions that reduce future burdens, considering the long-term impact of your actions. Justice is the virtue that makes you think generationally. It's not just about your wealth. It's about the stability you create for others. Marcus Aurelius believed that every action should contribute to the common good. Your common good is the network of people who depend on your decisions. Your partner, your children, your future self, your legacy. Justice means you invest not only for yourself, but for those who inherit the results of your behavior. You don't gamble with what others rely on. You don't take risks they'll have to clean up. You don't pursue wealth at the cost of integrity. Justice makes your wealth durable. Because the wealth built without justice eventually collapses under the weight of its own irresponsibility. Now let's step back and reveal the hidden power of the four virtues. Each one governs a different dimension of wealth. Wisdom equals clarity. Courage equals resilience. Temperance equals discipline. Justice equals responsibility. Together, they form the complete psychological architecture. For strong financial decision-making, it's like four pillars holding up a temple. Remove one, and the structure weakens. Remove two, and it falls. Most people try to build wealth with only one of the virtues. Usually intelligence. But intelligence without temperance is greed. Intelligence without courage is hesitation. Intelligence without wisdom is chaos. Intelligence without justice is self-destruction. Virtue is the missing piece in modern finance, and it's the reason you see highly educated people make catastrophic financial decisions, because money isn't about knowledge, it's about character. Let me show you how this plays out in modern markets. Imagine an investor facing a typical cycle. The market rises, leads to excitement, grows. The market falls, leads to fear, grows. The market rebounds, leads to regret, grows. The cycle repeats. Without the four virtues, the investor is pulled by emotion, reacting to every shift in the wind. But with the four virtues, the experience changes completely. Wisdom says, markets rise and fall. This is normal. Courage says, stay the course. Hold steady. Temperance says, don't chase the hype. Stick to your plan. Justice says, this decision affects more than me. I choose responsibility. This framework turns chaos into clarity. You stop being controlled by the external world, because your internal world is stronger. This is why Stoicism produces calm investors, and calm investors produce strong results. Not because the Stoics beat the market, but because they don't let the market beat them. Now, let's apply all four virtues to real financial scenarios. Scenario 1. Market crash. Wisdom. This has happened before. Courage. I will not sell. Temperance. I will not check daily. Justice. My future depends on my discipline. Scenario 2. Bull market hype. Wisdom. Nothing goes up forever. Temperance. I don't need to buy what I don't understand. Courage. I stay in my lane, even when others brag. Justice. I protect long-term stability. Scenario 3. Pay, raise. Temperance. Lifestyle stays the same. Wisdom. Invest the difference. Justice. I build stability for my family. Courage. I resist the urge to spend more. Scenario 4. Tempting high-risk investment. Wisdom. If it feels too good to be true. Temperance. I avoid greed-driven decisions. Courage. I don't follow the crowd. Justice. I won't gamble with my responsibilities. Four virtues. One framework. Infinite clarity. Now let's close with something powerful. You can lose money. You can lose jobs. You can lose investments. You can lose assets. But once you build a character based on the four virtues, you cannot lose yourself. And a person who cannot lose themselves cannot be destroyed by markets. Your portfolio becomes an extension of your mind. Your decisions become consistent. Your results become inevitable. Wealth becomes a side effect of virtue, not the other way around. This is how Stoics become unstoppable investors. Wisdom protects your clarity. Courage protects your resilience. Temperance protects your discipline. Justice protects your legacy. And together, they build a financial life that is calm, durable, and nearly unbreakable.